I think that is a very important skill to develop, right?
I think we're calling it the road to superstardom.
What factors do you look at when you identify companies?
What happened along the way, extremely important field.
Earlier you were discussing how finance is applied economics. Could you expand on that
Lots of
concept? Because I think that's
struggle,
a very interesting
right,
way to
with,
Good morning, everybody. Today we have a very important guest with us, who's a major professor in the field of finance. We have Professor Bjorn Espen Eckbo from the Dartmouth College from the US, which is an Ivy League university. We're very happy to have Professor Bjorn here. So, Professor Bjorn, could you please tell us what your major field of work has been so far?
Basically, I'm doing corporate finance. The field of finance can be split into two parts, typically. Asset pricing versus corporate finance. Asset pricing is like valuation of assets and trading portfolios, portfolio management, basically operating in secondary markets. While corporate finance is about raising cash to, feed companies' survival. And the issues that arises in corporate finance are very different from those in valuation. So basically, I was attracted to those kinds of issues. How do small firms survive? How do you start a company and then dress up in such a way that people will give you money to invest in you? And the dressing up part is corporate governance, which I've done some research into. So that's how I was drawn into corporate finance.
So was that your major reason you founded the Lindenauer Center as well? Because that is a major thing that you work in right now, right?
Yes. When I got to Dartmouth in 1998, I founded this Center for Corporate Governance, the Lindenauer Center for Corporate Governance. And we were the first center in corporate governance in the entire US top university league. So the thing about corporate governance, though, is that it's such a complex field because it pulls in, legal issues, accounting issues, financial economic issues. So to be able to understand corporate governance properly, you have to sort of think about all these fields at the same time. It's interdisciplinary. And for that reason, there aren't a lot of top research, I would say, in this field as a fundamental field, but it's an extremely important field for corporations, for corporate firms to survive and attract capital.
Earlier, you were discussing how finance is just applied economics. Could you expand on that concept? Because I think that's a very interesting way to put it.
Yes. So financial economics is a subfield of economics. Now, economics is a basic set of rules and principles and maybe economic laws, law of one price, for example. And what made finance emerge as a subfield was basically the data that came about in the late 1960s and early 70s. And nowadays, there are huge databases available online. But in the classical economic development, there was just theories. Back in the 40s, 50s, and 60s, people like Paul Samuelson, the Nobel Prize winner, he was an excellent theorist, but he didn't have access to data at that time. So, and macroeconomics, which is also a subfield of economics, had access to inflation series and to labor economics unemployment data. But finance suddenly came about with stock returns and stock prices for hundreds of firms, thousands of firms. And with that, you could test concepts in economics much more specifically. So that's why finance emerged as a very important, probably the most important field within economics.
So when we talk about your experience as somebody who's an expert in the field of finance, you worked in the restructuring or like the structuring of the corporate governance policy for the Norway pension fund, right?
Yes, because this Norwegian oil fund,
yeah,
which is basically, transforming oil into stock market currencies through the fund. Today, it's a $1.5 trillion fund in a nation of 5 million people. They grew from the mid-1990s to today. And in 2005, they called me up to help them set up a corporate governance department. So I spent 6 months there in Oslo. And that department's still there, and they sort of, it's an index fund, so they're not active.
Yeah.
But they still want to know what are the important issues in corporate governance, and they write letters to the SEC in the United States, for example, to try to impact SEC policies. So they sort of have a big voice in the investment community. It's been fun to help them out in that sense.
So because you've worked in like two very different markets, right? Because Norwegian market and the US market is very different. How effectively or how nicely do you think the corporate governance policies or ideas that you've set up in Norway translate to the US market, and then further maybe can translate to the Indian market?
It's not that different, actually.
Yeah.
Some of the basic stuff is the same everywhere, I think.
Yeah.
Now, corporate governance is basically about protecting the small shareholders.
Yeah.
And what you have to protect them against are either large shareholders who can actually do some damage to the small ones.
Yeah.
But also, if shareholders are weak or boards are weak, then the management team can actually do things that is also not protecting shareholders. So in the US, where you have a lot of dispersed ownership, this management agency problem is more upfront. While in Norway, smaller countries, and I don't know about India in this sense, but if you have concentrated ownership, the large shareholders are good at controlling the board and controlling then who runs the firms. So they're in more concentrated held firms, the conflict is between large and small shareholders. In widely dispersed firms in the United States, where the legal system is protecting small shareholders quite strongly, the conflict is between the C-suite and the shareholders. So, for example, for a long time, the CEO in the United States would be chairman of the board. And for the last 20 years, we have been arguing that's not a good thing. And there's a conflict of interest between having the CEO sitting there, and the board's task is to hire and fire and set compensation of the CEO. So if you're the chairman of the board, there's a conflict of interest. And now it's starting to change. So CEOs are no longer as much active in the boards.
So what is a growing trend? Like you're very good at doing research and all of that, right? So what is a growing trend that you'd like to analyze or research in the field of corporate finance or corporate governance in the future?
So the basic question that is researching corporate governance is to ask, if you have the profitability of firm, the value of companies, how does the value depend on the governance structure of the firm, right? And the trick is that all firms optimally adjust to their own situation, right? So you have some small firms with small boards, larger firms with larger boards, because they find it optimal. So when you run regressions and try to figure out how does board size affect firm value, you don't get the answer, because what you need is a shock. Because what happened in 2003 in Norway, as one of the first, maybe the first country that implemented a gender quota in boards. So that meant firms had selected their optimal boards, and then bang, here comes the law saying you need 40% from each gender to be directors. And that shakes up the board. And now how the firms react to that is a way to test whether the board change impacted firm value. So for the first time, we could see something that we hadn't been able to test before. So I did a paper on this, which actually found in that particular case that replacing male with females on board or directors did not affect the firm values of the listed companies. And that is actually quite an important result. So 10 other European countries followed up with similar things. United States, California tried to do it for the same reason, that it wouldn't necessarily impact the value. At the same time, people are supporting to get females into the business world. And if it doesn't cost anything in firm value, then it's fine, right? Now, in the US, doing things like this is actually often challenged in court because it's discrimination. And that's illegal under the Constitution of the United States. So this Californian attempt got shut down, so it's not happening.
Okay, so when we talk about skills that are necessary in the field of corporate governance, right? What do you think are most important skills that a student that wants to get into this field should develop?
So I think, to me, the most interesting corporate governance field is actively going into firms and fixing them. Lots of companies struggle, right, with the financial aspects of themselves. They may have too much leverage. They may have too much cash. They may have too many divisions. They're spread out when they shouldn't be spreading out. And when that happens, the value goes down, and then there are these private equity funds who are sitting on the sidelines and looking at these firms, and they can see these things coming by analyzing them, right? So you need to hire students and people that are experts in understanding the weaknesses of some firms in terms of financial structure. Then they come in and they buy up some shares that try to influence the board. And then if they're successful in convincing the board to, say, sell off this division, pay out more of your cash holdings, they will benefit from the rise in the firm value and make money that way. And they're quite successful. So that's a very interesting, much more interesting than, say, just managing a mutual fund, right?
Yeah.
To go in and fix firms.
Yeah.
At the same time, but it requires a lot of understanding from coming out of corporate finance.
So when you talk about identifying issues in terms of like companies, right? How do you go about doing this? Like, what factors do you look at when you identify companies, and how do you think is the most effective way to fix them in these companies when students move into them?
So each company is different, so
Yeah.
you can't really generalize. But what the big thing is, how do you get the board to agree with you? That's the key.
Yeah.
Right? So if you see a company and you realize the board is not doing a good job, it's over-investing in something, it's under-investing in other things, the trick is to go in there and with the language and the way you present yourself that doesn't cause opposition from the board. Right? So you have to figure out a way to not only be smart, but to be able to convince others who actually are attacked by you, in a sense, criticized by you, to go along with you. And that skill is rare, but it's very valuable and it's very interesting. Another area, by the way, is when you see a company going into financial distress, then of course that's easy to see, right? So following the leverage and the over leveraging of some firms. Now you can perhaps go in and purchase the debt at cheap, go to the bank or the bonds, purchase the bonds at 20 cents on the dollar. And then when the company is eventually in bankruptcy, you have the debt. So you are being asked by the courts to have opinions about where to go to get out of bankruptcy. So we call it loan to own. So if you can see a company going down because it's over-levered and they're unable to fix it, you can buy the debt cheap, and then you can convert that debt into equity and take it out of bankruptcy, and now you own the firm. So you loan to own.
I mean, I think that's a very interesting concept, right? Because a lot of us students, when we try and get into work, it's that we want to get into a very good company that is doing well. But as to what you've said, going into a firm that is not doing so well could be very critical in terms of skill development when it comes to.
And that's socially valuable, right? I mean, every country wants firms to survive. And so if you have these two fund management skills, one is to go into a mutual fund and then operate an index fund or maybe an active fund, trading in the secondary market. That's sort of the classical finance fund management story. But I'm coming from corporate finance, and so I'm looking at the other side where we have these struggling firms, and they need to be fixed. Otherwise, society is worse off. People are fired. But you need a lot of skills that are different from the fund management skills. You need to understand how to fix corporate, distress, bankruptcy risks, how to understand when a company is doing the wrong thing, and then go in at the same time, convince the board of your ideas, so it doesn't fight you.
So when we talk about like developing these skills, right? So when you mean you've been at Woxsen for a while. What do you think Woxsen as a university could do better in like developing these skill sets for students and like providing them a platform to be better in the field of corporate finance and governance?
So I just came here, and I'm impressed by what I see. It's a startup. This
Yeah.
is a startup university, literally, right? So I'm learning about Woxen as I'm
Yeah.
the last couple of days, and I'm impressed that from what I see among the students and the faculty, they are so inspired by this startup idea of bringing in students and being more sort of practical, I suppose. I haven't yet seen all the research side of
Yeah.
Woxen, but I've talked to a lot of students so far. I'm going to do more in the afternoon here. And I'm impressed by the level of interest and excitement that the students have. We also have a law faculty, by the way, and I like law faculties because law and economics, law and finance
Yeah.
are complementary fields. So I would encourage students who wants to do more of what I said about active investing in say, bankrupt firms,
Yeah.
understand the legal aspects of, say, bankruptcy,
Yeah.
bankruptcy law, and what's wrong with it, what's good about it, how can you fix it.
Yeah.
So hopefully there may be some interaction between, say, the finance students here and the legal students over there in terms of coursework and maybe even research.
I mean, when we talk about learning these fields, right? So because I am a finance student here, but I also have courses in relation to economics and law that I've done.
Good.
So we do courses in terms of like macroeconomics, micro, and then further like implemented stuff as well. So it depends on what your interests are, and like there is a platform for you to build upon.
Oh.
And in terms of like connecting with other students, right? So we do a lot of like cross batches or like cross courses like activities that we get involved in. For example, we do debates on how a certain policy that is being implemented for a company could affect the entire economy or the company in terms of like how it would affect the little guy in the company, right? So we do things as such, and I think that is a very important key skill to develop, right? Yeah.
Yep. So right now I'm working on a project that's, I think we're calling it the road to superstardom. And the idea is to figure out how small firms grow to become Google, right?
Yeah.
You know, what happened along the way.
Yeah.
In what sense? And the one focus we're going to do right now is to ask, did you grow internally or did you grow externally? Right? Externally is buying other companies and growing that way. Organically, you grow internally through your R&D and investments. So we're going to figure out, using the large U.S. companies with census data, U.S. census data, to try and answer that question. So it's still unanswered.
So it has been a pleasure interviewing you, Professor. I'd like to catch up with you sometime again when you come to university, try and learn more from you. But currently, it's been a pleasure. Thank you for the interview.
Thank you too, and thank you to Woxsen University for inviting me. Thank you.